sales, because that's going to dominate the action as we start off, Sonia.
Oh, absolutely. And the good part is that the auto dispatches for the month of May have been very strong, especially in pockets like two-wheelers. So you've seen demand come back in a big way. Domestic sales have picked up, albeit on a low base, but exports continue to be under pressure. Now, if you look at it, across the board, Hero, TVS, Eicher Motors, very good numbers coming through, especially for Royal Enfield. It's a 22% growth that we've seen year on year. And the only worry pocket has been Tata Motors. So over there, commercial vehicle sales are under a bit of pressure. And that's something that does not go well with the street. Basudeb Banerjee, who's the analyst at ICICI Securities, joins us now to talk about that. Basu, a blank check question for you. How did you like the auto numbers this month? And what stood out for you as a stock, perhaps, that has more upside post these numbers?
The numbers were pretty good across the board, especially two-wheelers, as you mentioned. Passenger cars were more or less, I will say, flattish, and commercial vehicles also gave out with a positive surprise. So the number, as you were saying, Tata Motors, bad set of numbers because overall numbers were negative. But if you segregate that, MHCV numbers were more or less flattish YOY. So from a value perspective, LCVs are very small, though from a volume perspective, they are impacting. So TAMO numbers were in the commercial vehicles were also pretty much decent, I will say. From best positive surprise perspective, I will say, yes, Royal Enfield numbers close to 78,000 units, which implies domestic wholesale of 70,000 plus, because exports were hardly 7,000. So that has been a big positive surprise, and numbers also came in the later part of the day. So from that angle, I'll say Royal Enfield numbers were the best in terms of positive surprise.
Basudeb, so from a stock positioning point of view, see, a lot of these stocks have run up. Most auto stocks are already sitting at their 52-week highs. So from a positioning point of view, in terms of just, tracking better returns, which would be your top buys at the moment?
So as you know that we don't go into the momentum trade perspective, we'll always look at sustainability of the business from a two-year angle. From that perspective, looking at the cyclicality into aspect, we continue to prefer TVS Motors as a long-term buy even at current levels, where post the recent FAME subsidy changes, the only difference is break-even levels for iQube will only move up because the quantum of subsidy reduction and the quantum of price hike are different, so which will reduce your EBITDA per unit and require more scale to become EBITDA break-even. So barring that, from exports revival, domestic models doing well both in urban and rural markets, TVS is the best place, diversified two-wheeler play. And in terms of few of the foreign capital allocation areas like Norton, the moment they start turning around, nothing better than that for TVS.
Okay, we'll leave it at that. Basu, thanks a lot for joining in. Appreciate your thoughts. That's the word coming in from ICICI Securities.